I wonder why Chicken not buying JD. Chicken, I think he's not so bullish on China. Ever since he joined the backholder pod, right, I think he kinda influence. Or maybe the Eric, Bunty and Kelvin, the three of them, they are very bearish on China. So Chicken nowadays, he's not bullish on China anymore. So recently, I watched his video, I think he bought into LVMH. So mostly he's buying into the US and Europe market. And he's not buying into the China market already. I think Chicken, I think he's trying to diversify. He don't want to.
Did Chiking lose his way? Did he lose his conviction behind some of his Chinese picks like Baba and Tencent? Maybe he doesn't know what he's doing anymore and he just wished to diversify out. I think why not hear it from the horse's mouth? This is my portfolio update, accurate as of 15th of October. And it's true that on other various occasions, I did float the idea that I'm interested to investigate whether there's a value opportunity in some of these Singapore REIT companies, particularly so in this higher interest rate environment, and many of these REIT counters have taken a huge beating. And on top of that, in one of my latest videos that I've released, I did say that I bought into two new positions, S&P Global Intelligence and also LVMH, which is the luxury brand. So you can see those two new additions is currently the second and the third smallest position in terms of weightage. And of course, if I continue appreciating and understanding the business a little bit more, I'll continue adding on as they hit support levels and think that, hey, valuations are compelling enough. But I think that said, if you were to really judge it on an overall portfolio basis, look at the four biggest position. It makes up 75% of the entire portfolio. And those are your traditional Chinese names that you know that I've been a huge bull on. Alibaba, Tencent, Chinese banks, and KWeb. So if you ask somebody that has a 75% concentration on the portfolio in one country or one geographic region, and more importantly, they are of similar nature, they are in the Chinese tech sector, excluding the Chinese banks, tell me about conviction and tell me about losing faith. I think I still remain steadfast. And truth be told, I really don't understand why. We are not building a cult here. I'm just sharing my own investment journey, my position, my thought process. In actual fact, I hope that none of you actually followed me into this position and you guys only chanced upon my video after you bought into the stock. Conviction shouldn't be borrowed. If today I go missing and you don't even know where my whereabouts are, and I stop updating you at all about Alibaba, would you sell off your position? I think that's just a question for you to ponder upon. And more importantly, investing is just a game of allocating capital. I don't need to be married with one stock and one stock only. We're not talking about relationships here. So today, if I sell out my entire Alibaba position and transit it over to something else, people shouldn't even be blaming me about it because yeah, I have been extremely convicted, but if I do see another better opportunity, why not switch it out? I mean, that's just a theoretical discussion, but I think the bottom line is we shouldn't get too emotional about this. But I think one bigger question that I just wanted to answer really is this idea about the great decoupling. Specifically, the undercurrents behind many of the US companies or even MNCs, international companies, moving out their manufacturing footprint out of China. So we see many companies taking the signal from the US government like Apple, TSMC, and they're forced to basically move out to Vietnam, to India, even back to the US soils. Because citing national security reasons, of course. Because if the US politicians and the entire US political scene continues bashing onto China, why would you want to be stuck in such a hard place? And why not just invest based on the current trends and not go against the trends, investing into China if, let's say, the international order is going to make it hard for you to hold some of this Chinese position? At first thought, when this question was thrown to me, I really didn't think much about it because firstly, I do fundamentally believe that at least in the short to medium term, China is not going to invade Taiwan anytime soon. Secondly, at least on the global infrastructure perspective, the current supply chain is so complex and intertwined to the point where I don't think it's so easy to just say decouple. And it's not even a simple matter that it's going to be solved within the next 2 to 5 years. It's probably going to take decades. And I really don't see the incentive in why they wish to decouple with China, which I will explain further on later. And on the third point, I do feel that this entire narrative and rhetoric is just political theatre to many of these US politicians. They just need to score brownie points when they are up running for their US Senate or presidential election and to tell the world that, oh, how tough they are on the Chinese authorities and import-export with the Chinese countries. Weeboo's in-house platform feature helps me save a lot of time. So when looking into a new company, some of you might really just want to have a high level understanding of the basics of the company. So in Weibo's native app, you can actually click into the company section and it will essentially provide you with an overview of the company's past financials, key indicators that you can play around with, and even peer comparisons amongst their competitors. So these different numbers and rankings allow me to make the split decision on whether I should look into it further. And thus, Weibo has helped me save a lot of time. So on top of saving time, did I mention that Weibo has upsized their current welcome deal from 2 free shares to 6 free shares now, potentially worth up to $3,000 if you are the lucky one. So their current Money Bull campaign is also offering really attractive rewards if you deposit and activate your Money Bull account. So for those without a Weibo account today, I honestly don't know what you're waiting for. So sign up link will be down below. Thank you Weibo for sponsoring this video. So that is why I didn't really pay too much attention about it. But I think over the last 2 quarters or so, I've actually received increasing amount of DMs, private messages, emails, asking me about my thoughts about it. And I think upon reflection, it is true that this undercurrent is going to underpin the coming decade or even 2 decades where we have to entertain the idea of this great decoupling. But I think to put many of this political discussion aside, now we should don on the thinking cap as an investor. We just need to ask ourselves this one question. How is this mega trend going to affect our portfolio? This idea of a great decoupling. So I've read recently from a different publication, I've forgotten where was it, but this particular writer was basically encouraging his readers to start decoupling on a portfolio level. Essentially saying that, hey, if you're interested in investing in a Chinese company, sure, go ahead. But please invest in only a company that probably based in China and where a majority of its revenue is derived from China. And there is no such cross-border pollination where they also have to rely on their US counterpart. On the flip side, if you wish to invest in a US or even international Europe company, try to also restrict your scope in terms of where they are based in and how they derive their revenue. If you were to really look at many of these top companies in the S&P 500 today, companies like Apple, Tesla, Nvidia, mostly your big tech companies, they all have a huge footprint in China, whether is it in terms of supply chain or whether is it in terms of customer base. Tesla relies on China to make a huge bulk of their production. They also need to rely on their customer base, and Tesla is one of the leading EV manufacturers in China today. Apple similarly, supply chain and also customer base. And they're essentially trying to diversify their supply chain after the shock and a lot of the signaling and posturing by the US politician. So it then leads me down into this rabbit hole into really trying to dissect individual, maybe S&P 500 companies or major US, China, Europe companies, how probable or how possible it is for us to decouple our portfolio. I think when we really look into some of the major non-Chinese companies that I own in my portfolio today, really I think only Meta and potentially Google is out of that pack where they really don't have a lot of Chinese footprint. If you were to really go down the list, think about it. Amazon, they rely essentially on a lot of all these cheap manufacturing goods. A lot of their suppliers rely on cheap Chinese goods. If you're going to cut off and sever the arm of Amazon, I think the entire retailing business is going to collapse on itself. But that's it. Of course, AWS is still the crown jewel of Amazon. Next up, TSMC. They're also a huge provider of all these high-end chips to many of the downstream suppliers like Nvidia, AMD, and they in turn sell these products back to China. And one of the biggest demand for TSMC chips, it's actually Apple. And Apple has like 20 or 25% of their revenue from China. So really, is it so easy to decouple? It makes me wonder. Next up, I think moving on to some of the new picks, S&P Global and even LVMH and even Estee Lauder. This is Estee Lauder's recent earnings in terms of their geographic region. Around 33% of their net sales is derived from Asia and Pacific. Of course, Asia and Pacific is not China alone. It includes this part of the globe, but I do believe that China do make up a huge part of this 5.2 billion. Moving on, I think in terms of LVMH, it's a similar story. Asia, excluding Japan, makes up 32% of their geographic revenue mix. How many percent of this is from China? I think at least 15 to 20%. Moving on, even for S&P Global, some of you might think that, it's a credit rating agency, mostly in the international space, congregated in the US, and they don't really provide in terms of a revenue segment breakdown. But I think back in 2019, they did say that they started S&P Global China Ratings, which is a company wholly owned by S&P Global, and it's the first and only credit rating agency permitted to operate in China. So whether will this part of the business continue to grow, I'm not too sure, but I think my conclusion is rather simple. Is there really an easy way to combat this idea of a great decoupling? I don't think so. Unless you really only buy US companies like your defense contractors or like your advertising companies like Meta and Google that does not have a Chinese footprint. If not, I think you're really going to find a very hard time. But that's it. I think the more critical factor for investors that want to start a new position in a company, most likely a MNC, a multinational corporation, is for you to really have a good understanding and a good grasp of the business fundamentals and what is the revenue mix. Don't be blinded by the perspective that, only Chinese companies are subjected to the Chinese government's wrath. I would speculate that in a tit-for-tat dispute between US and China, many of these MNCs will be caught in the middle. And it's really dependent on the management team, how skillful they are in terms of navigating this tension moving forward. And I think NVIDIA, Jensen Huang, the CEO of NVIDIA, is one classic example of being extremely skillful in knowing how to play both sides and still earn revenue. So I think one interesting fact that I wish to share is that some friends actually dropped me a text or dropped me a link to this article saying that America's biggest trading partner is no longer China, but this country. And long story short, it's basically Mexico. You can see that in terms of the trend lines of their import-export, Mexico actually became top US trading partner at the start of 2023. Mexico is this green line from right around 12-13%, all the way now to more than 16%, I believe. And China, which is this red line, it started at 5% in the 2000s. It went up to the peak of around 16-17% in 2020, and then it collapsed down to nearer to 10% in 2023. And many people are saying that, why are you still buying into Chinese companies? Look, all the supply chain are being diversified, and many of these Chinese companies are going to be at the brunt of the anger of many of these US politicians. But I think to kind of give you a more complete and more fuller picture, this is China's export to Mexico. What does this graph look like? It looks like an exponential increase, right? So from 2013, it was less than 30 billion. I think in 2022, it's closer to 80 billion now. So it more than 2.5x, it nearly 3x. Maybe in 2023, it 3x'd. So we all have that baseline understanding that, hey, China is still the factory of the world. But whether you plaster on the goods that it's made in China, made in Mexico, or even made in US, who really knows? And back to the idea of decoupling, this entire charades that was done by both sides of the aisle, they are just basically complicating the supply chain further, moving from relying solely on China to allowing for another country to come into the middle to become the broker or the middleman. And this essentially drives both margins and revenue down. And who's going to pay for this clown fiesta? It's always the consumers at the end of the line. And there's this recent report from BIS which essentially acknowledges this trend. So this is just the key takeaway from this report. The latest firm-level network data reveal that global value chains have indeed lengthened, although without the accompanying network densification that might indicate that supplier relationships are diversifying. Indeed, the supply chains are in the process of lengthening. So simply put, the suppliers to US customers for both one-step and two-step from the rest of Asia Pacific is on a very healthy uptrend. This probably explains the healthy level of diversification away from Chinese suppliers. And for China specifically, there's a huge drop to the US customers. But on the flip side, you can see that the customers of China suppliers from the rest of Asia Pacific, it has increased by multiple folds. In fact, if you compare in terms of percentage points, suppliers to US customers, it increased by around 5 percentage points for one step. And the customers of China suppliers, it actually increased by at least 2.5 times to 12.5%. The same story can be said for the two-step processes. So it basically confirms the phenomenon that, hey, indeed, US are buying more from other countries, but other countries are in fact buying even more from China, and they are basically just playing musical chairs. Feel free to leave in the comment section down below what you think of this entire idea of the great decoupling from China, and I'll see you in the next video. But more importantly, I'll finally see you on the moon. Goodbye!